Hi guys. A little bit of vindication. An issue is that my normal recording tool is not working, so I'm trying something different just to make sure I get this out there, because I think today is important. There's Jerome Powell spoke, and it didn't really say anything different, but the market certainly woke up and started to take notice, and I guess a bit of vindication for me because I've been calling it for a while. And stocks have largely ignored it until last night. Aussie dollar got absolutely smashed, and US dollar was pretty strong. Long end of the bonds weren't that strong, but the short end certainly took off, and so did US dollar. So just want to go through a couple of charts here. In that we've got this chart here, which is the Fed expectations of where interest rates are going based on market pricing. We can see that it obviously rallied as he was raising rates, and then when inflation sort of peaked and started coming off late last year, everybody's expecting him to pause interest rate hikes. But then towards the end of January, I guess the inflation picture, whilst it wasn't at its peak, it came off to, I think it's around 6.2, 6.4, somewhere around there. It hasn't been dropping since then. So, interest rates are continuing to go higher. And this is the market expectation of where interest rates are going. So in March, we're looking at certainly 50 basis points moved in March, and then another 25 basis points in May. And June is also now picking up. So that's 75 basis points over the next two meetings, which puts the US at 5.5. And then June is also now creeping higher. So we could be looking at 5.75% interest rates in the US. And we did talk to you about before that interest rates are going closer to 6. So what we're seeing here is RBA met yesterday as well, and they said they're looking at stopping the rate rise trajectory, putting it on pause, whilst you've got US continuing to go higher. So that interest rate differential is certainly starting to really bite into the Aussie dollar. Also on the back of that, a bit of a double whammy for the Aussie is that because of the US dollar, we've got commodities absolutely smoked. Oil, gold, copper, commodity index absolutely punished, and also obviously coal there as well. So that as well is not great for the Aussie. So Aussie dollar under a lot of pressure, and I expect that to continue with the Aussie dollar sort of daily chart. Aussie dollar sort of heading back down towards the 60-cent mark over the next couple of weeks to months, particularly if the RBA do stop raising interest rates, whilst the US continue to rise interest rates. Last chart I wanted to show, where was the, this is the 2-year bond, 2-year government bond on the yield. You can see certainly that that's taken off and had a bit of a pause on the inflation, but now it's taken off again, and it's back to where it was sort of just before the GFC. And the other thing that's important to note here is that this 2-year interest rate differential between the 2-year and the 10-year bond is an indicator of recession. Right? So every time it gets below zero and then starts to bounce, you can see the market heads into a recession. That's these red lines. Vertical lines is the recession. So when it tips under it and then starts to bounce, then you get that recession. And since the 80s, it's been about every 8 to 10 years. And, we had this big stretch here of more than that, just on the 10-year mark. But on average, these are about 8 to 10 years. And certainly we're at a level now not seen since the 80s. So when we see this 2-year, 10-year pick up, so what needs to happen for that is either the 2-year needs to come down and the 10-year stay flat, or the 10-year needs to catch up and go way over sort of 6%, where it's currently trading at around just under 4%. So because you've got the 2-year at 5%, you need the 10-year above that for that curve to look like this, yeah, rather than that curve looking like that. Is the 2 years at 5% and the 10 years only at 4%. So that differential needs to change, and when that does, then you're pretty much guaranteed of a recession being sort of 6 months away. So with that happy news, let's go and have a look at some charts. And we'll start with VIX, which surprisingly, despite the sell-off in stocks, which was quite dramatic, as you can see here in quite a large move, VIX was pretty sedate, which is this is the fear indicator of people, purchasing options to protect from the downside. That's quite sedate, which is a bit of a surprise. Dollar index, as I said, it took off, probably a bit overextended on the time frames that it needs to come and fill this gap back in. Certainly down to here at least, potentially even back down to 104. I can't see it getting back to 104.40, but certainly it should come back and fill this gap in, as it's way overheated on the 1 hour and the 4 hour. Plenty of upside availability on the daily, but you might see a bit of resistance across here, and see that just a little bit of a pullback, giving you another opportunity to snag a good long position. Dollar yen, similar, took off. Hourly is probably a little overdone, as is the 4 hour, but see a bit of a retracement and then a bounce and get into it. We do have the BOJ on Friday, but don't expect too much from that. We know their stance, and that's they want to remain with negative interest rates and a weaker yen. So that's I want to be buying yen when that's the goal for the BOJ. So yeah, wait for that opportunity to sell yen, buy US dollar, sort of around circle mid 136s. Cable, just a choppy, frothy mess, but it's finally broken out of that. Now that's where your resistance is going to be to lean against, right? So if we grab a horizontal, you want to be leaning against that level there. So what we wanted to see is US dollar come back up to here and get short that. Euro dollar also pretty big selling day, overdone on the hourly. Back up here to sort of 106 would be a good opportunity to sell that. And Aussie dollar absolutely smashed, and it started right on the RBA, which is here. You can see on the 5 hour, started as soon as they announced their interest rate move, and the statement showed that they were thinking of pausing. And the Aussie barely has looked back, and there's Jerome Powell's talk. So where to find an opportunity here? Well, this one here makes sense, but I doubt you're going to get it. And that's 67 figure. That's 120 pips away. I don't think you're going to get it back up there. Not going to see that. I dare say this gap here, which is this gap, is what's going to be filled back in. So that's what I would be looking at, is filling that gap back in as a opportunity to get short. If you're looking to short the Aussie, and that's sort of around 66.50, and we can see that it's a bit of a also a bit of a support level there too. But that's where I'd be looking, the mid 66s to get short on the Aussie. All right, guys, that's it. I hope this video works. But yeah, you have a good day. Stay safe out there.